So I'm Mark Kingdon. Pleasure to be here today. I'm not running on bourbon, but I am running on Mai Tais. I hope you all are too. How many of you have had at least one? How many of you have had at least two? What about you?
Finished one.
Finished one, okay. So a quick bit about my background. When I was 6 years old, I decided I was going to be an artist. Until I was about 20, that was the path I followed. But I figured out quickly that I would graduate from college and be unemployable as an artist, and I would probably starve. So I got a quickie major in economics and then went on to business school on the East Coast. Still didn't know what I wanted to do with my life, so I joined a management consulting firm and became a management consultant, which is what you do when you don't know what you want to do. Great training. I spent 12 years there. I was a partner in thousands of companies, which was a phenomenal introduction to the analysis of companies. In the late 90s, the internet beckoned, and I went to one of the first accelerators or incubators that Dave mentioned, which is called Idea Lab, run by the infamous and wonderful Bill Gross, who is one of the most phenomenal people to work with in the world. My timing was awful because I joined, and 9 months later, the dot-com bubble, and Bill turned to me and he said, "Mark, you could stay forever because we love you, but companies aren't being funded and we're not building much." So I left there and I joined a company called Organic, which is a web development online advertising agency. It had just gone public, listed on NASDAQ, had the dubious distinction of placing the first banner ad in internet history, if you look at media. And so I spent 8 great years there. We took it private with private equity money and built a really, really big business, doing all the big websites for Web 1.0 and then later Web 2.0 companies. While I was there, I started investing in startups. My first was in a competitor to YouTube, launched at the same time. And one of my employees, my number 2 guy, needed a job. I introduced him to Howard Morgan, who's a very well-known venture capitalist at First Round Capital. Howard had been on my board. He was my boss at one point when I was at Idea Lab. He placed Troy, the guy, at Video Egg, so I wrote my first check and joined the board, where I had 8 glorious years. I started investing and invested in another company called Kidzooey, and then my third investment was a company called Twitter. And I will take exception about unicorns, because I think everyone talks smack about unicorns unless they have one, and then they like them. So I do believe in unicorns, and they can put you in a castle. But anyway, I started investing at full speed in 2010 after I left my second CEO job, which was CEO of Second Life. So how many of you ever joined the online virtual world Second Life? Okay. So I was there for 2 years, left, and then I started investing full-time as an angel investor. I'm in a couple of dozen companies. I focus on e-commerce and e-commerce enablement, and I focus on social media and social media enablement. And it's just me. I invest on my own dime. I've resisted the urge to create a fund because I just don't want the headache of LPs and GPs and everything else. And I don't want anyone influencing or second-guessing my bets. And the reason I say that is because when I invested in Twitter, as an example, a very famous venture capitalist said, you can put money in, but at most you're going to get a 4x return. And I actually got more than a 400x return. So I make it my rule really not to consult and not to get involved in groupthink about investments. I'm a bit of a contrarian. So that's my philosophy in investing. Now, why did I move to Miami? Well, first of all, I moved to Miami last April after a horrible winter in New York. It was so cold. I came to Miami in January. It was 85 degrees. It was glorious. I found a house. I found a school for my kids, and I moved on April 2nd. And it wasn't just because of the weather or the location, but I've been to Miami many times. And I was very excited about the startup ecosystem that I was seeing here, which surprised me. There was energy. There was a place for me to go. There was something for me to plug into. And like David before me, I was tired of kind of the New York, the Silicon Valley, Silicon Alley grind, and a bit more about that. Why Miami? It's at least 2 times better than any of the markets that I mentioned, and let me tell you why. The first is the weather. I'm sorry, it's raining and snowing in the Northeast today. Where would you rather live? Here. It's much better. There's a great great volume of networked entrepreneurs here. The thing that I love about Miami is if you're here, you can step into a network and you get a royal welcome. And I'm sure David, as a new to the market, is feeling that. I certainly felt like I got a royal welcome. And people welcome entrepreneurs and make it easy for them to connect. It's a gateway market, as we talked about, to Latin America. There is startup capital here. There's a lot of startup capital here, and there are a lot of checks being written. I'm going to talk about those checks and where I think they should be going in a moment. And then there's a low cost base, and I think that's a very big deal. You can offer developers and other great talent an incredible quality of life here. They can come here and live in an apartment that's 50% of the cost of something in New York or San Francisco, and it's going to have a beach view, not a brick wall view. Average office rents probably half, if not an even greater savings than those markets. Dev salaries are just about half of what you might find in the major markets, and the expectation is lower. One of my companies in San Francisco lost a couple of engineers. We did some exit interviews, and we said, "Why did you leave the company? We just, we grew 100% last year. Things are great. We have great traction, phenomenal business, potential unicorn someday." And these were the answers the engineers gave. You only serve meals on Friday, 1 day a week, and it's only lunch. There's no massage. This is true. This is out of the exit interviews. There's no massage, and there's no yoga, and there's no van service. I mean, I can assure you, you don't hear that in exit interviews in Miami, but you do hear it in Silicon Valley. And it's hard to recruit loyal, stable employees when that's the market you're in. Now, what have I found investing locally? Because I have two investments here in Miami. One is called Sketchy, which is a social network for artists, and the other is EveryPost, which is a social media management tool. I've learned a lot about investing in Miami, and I want to share some of my thoughts with you. First of all, as I said before, there's an awesome and welcoming community. I think that's important because I think we need to recruit more entrepreneurs to the Miami market. I think it's really important because this is, as Dave said, a numbers game. If we can get more people to the market, we can have a greater chance of success, and then we can really build the ecosystem that we need here. The ecosystem that exists is vibrant. I mean, there are code schools that are teaching developers to develop, AGP and other organizations which are looking at deal flow. There's wonderful community events like this. There's the lab. There's great co-working space. There's just a lot of support, I think, for entrepreneurs. There are other active investors. I was very surprised by the number of investors I found in the market. Whether they're really investors or they're play investing, I don't really care because they're writing checks to entrepreneurs. They're getting companies started. I love the deal flow that I'm seeing here. I would say it's 5 times what I expected. I thought it would peter out after 3 months, and I still continue to see interesting companies. And what I like about the companies is I feel they're real. One of my frustrations with Silicon Valley, and this isn't directed at you, Dave, or 500 startups, so don't think it's the case, but a lot of the companies that I see in the Valley are BFF companies, not best friends forever, but built for financing. And I say that because they all have a great pitch story. The founder story is terrific. They built an app. They hacked the App Store and had 15 minutes of fame as the #1 in their category. They have a round that's oversubscribed by 2 times. It's closing on Tuesday, but they really respect your background and they'd like to have you in the deal if you can make the commitment. That pitch is like the universal pitch, and I couldn't hear it anymore. I found it sickening. Here, I think you see a great deal of earnestness in the companies that are being pitched. The entrepreneurs are starving to build these companies. They really believe in these companies. Their pitch is not nearly as slick. It's a little bit more raw, but they really care and they're doing what they need to do to build companies. And I love that. 4 of the last 5 investments I've made have not been in New York or San Francisco for the reason that I'm finding better companies in other markets, better valuations, and real entrepreneurs. The one thing I've seen about Miami, and I think it is important, is that the valuations are more digestible. They're not crazy. I got a pitch from a San Francisco company last week. At the end of the pitch, this is a pre-product, pre-revenue company. I said, what are you looking for in terms of a deal? And the guy says, well, we're looking for a convertible note with a $25 million cap. It's like, really? I said, how do you justify the valuation? I expected a good answer. He said, well, we're a San Francisco company. That was his justification. Obviously, I didn't write a check. I haven't heard any of that nonsense here. I think entrepreneurs are practical, I think they're real, and I think they want to get a deal done. That's exciting. The one note of caution I see here is that I think companies are getting underfunded. So when I kind of step back and I look at the landscape, I'm seeing a lot of checks being written. I think too many checks are being written to too many companies, and there isn't enough consolidation of investment behind winners. And I feel like there's enough money for the entrepreneur to kind of get started and kind of get going, but it's certainly not enough to get them to the momentum they would require for a Series A, and I'm concerned about that. So one of the takeaways for me is I'm not going to write a check unless I feel there's a real critical mass of investment. Now, that sounds like common sense, and it sounds like something you do normally, but I think it's a problem that I'm feeling is unique to Miami, which is a lot of companies are getting a little bit of funding, it's getting them going, but it's not getting them over the hump. And so I would just caution all the investors in the room, be very selective, and let's try to consolidate our investment around companies that can win, because we need those breakout wins. That's all I have to say. Thank you.